Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 8th of January. Starting off with the FTSE 100, which seems determined not to give us a solid start to the start of the year. We're back towards that broken February resistance line there from last year, 7600, and below that risks a move down to the 50-day line, 7520. On the upside, still trying to break that pesky 7780 zone to then give us a break up towards retesting last year's resistance through 8000. But at the moment, looks as though we're very much focused on trying to maintain the top end of this range and not go back below 7600. RSI has given us a break of the uptrend line there from back in October, so aggressive bears would be going short of the FTSE 100 at the moment and looking for the 50-day line or even lower than that. The worst case scenario is 7300 and the floor of that rising March trend channel. On to the DAX, which we hope is in a better position this morning, and here at least we're holding above the old resistance there from back in July around 16,500. Above that we're looking for 17,000, which is a May resistance line projection, and then the best case scenario would be up towards the resistance line there from this time last year as high as 18,000 by the end of next month. But a lot of work to do in terms of staying above 16,500 and not actually falling back down to August-September resistance around 16,100, which is now the area of the 50-day moving average. Moving on to the Dow, which has been the leader over the last few months, and here we see the market basically closing hopefully at the floor of that rising trend channel from back at the beginning of October. The only problem with that channel is it's very steep, so that does suggest that we need to either test 37,000, which was recent December support, or maybe even down to November resistance, or December resistance rather, it's 36,300. But at the moment, probably going for 37,000 as the base. An end of day close through 38,000, and that March resistance line projection could then take us up to the top of the rising October trend channel as high as 39,300 by the end of next month. On to Bitcoin, which has given us encouraging signs that it'll be able to break 45,000 relatively soon. Here, like the Dow, we've got a rising trend channel from the beginning of October. Floor of that channel currently around 42,000, let's say, to give it a bit of air, and that's still above the 50-day moving average, 41,500. But still waiting on that end of day close through 45,000 to give us a possible end of February target up towards 50,000 plus. If we're really lucky, obviously it could be by the end of this month. Below 41,000 risks a retest of that November resistance area, 38,000 to 40,000, but at the moment it looks like we're not going to be pushed on that. Moving along to gold, and here the markets have died a death, but at least it's died a death above the $2,000 mark and above the 50-day moving average around 2020. Looking for a little mini break of 2065, which is that old May resistance line to take us up to 2100 again. Through 2100, we're looking for 2180 by the end of next month, which is that late May resistance line projection heading in that direction. Moving on to the stocks, and starting off with a stock which I haven't looked at for quite some time, ADM Energy. Here, a possibility of a broadening triangle base here. Target here would be 0.56 pence on any end of day close above the 50-day moving average at 0.44. The reason that area is quite important is also because 0.44 was also the support back in June, so it would be a bear trap rebound. But above 0.44, looking for hopefully 0.56 by the end of this month on that stock. Stock which I haven't covered very much, but maybe should deserve a bit more than it's had, is Adams, and here we're in the wake of that unfilled gap to the upside, bear trap gap reversal, and V-shaped bull flag as well. That suggests that we're in a broadening triangle base from actually as long ago as 2020. Top of that triangle heading for 12 pence, and we're hoping for that by the end of next month. We're back by the way that 50 and 200-day moving averages are both rising, and of course we've had that unfilled gap to the upside. Moving on to one of the stars of the show in the last 4 to 6 weeks. A lot of people jumping up and down very happily about this, but Corcel's been a study in a share hitting all the targets we wanted it to hit. Of late, we were looking for 0.8, then we were looking for a penny. That's been achieved, and above a penny, we've got the chance, it may be relatively slim now given how far we've come up, but up to 1.3 pence, which is a resistance line projection from the summer of 2022. But the key here really, I suppose, is holding above a penny, and if we can do that, then pushing to 1.3 pence plus. Nightmare scenarios that we then go back below 0.8, so the level that we really need to hold is that zone. On to a stock which is back after a long period of absence, Clontarf, and here you can see that looks like we've got a falling wedge, or the attempt at breaking out of this falling wedge, which has been in place since June. Above that at 0.05, we're looking for up to 0.09 at the 200-day moving average as soon as the end of this month. Only back below 0.04 really, questioning the break to the upside. Good to see, well, it's good to see any stock on Aquas going up at the moment, but the one that's done particularly well in the recent past is Coinsilium. And here you can see that we not only hit our previous target around 2.3 pence, but also exceeded or temporarily exceeded our second target there at 3.6 pence. That's still the level to shoot for over the near term, while we remain above the 3 pence area, which was basically resistance on the way down. If you're a fan of the shares and looking for greater glories, then probably the line I'm about to draw now would be the destination for the stock, and that would imply a target towards 4.5 pence by the end of next month, but obviously we've come up a long way in a short time there. On to a requested stock which has also had news today, DG Innovate, and as I've been suggesting, shares probably should have gone up rather more than they have already, but obviously a few tired hands in there. Golden Cross buy signal towards the end of last month, 50 and 200-day lines rising, and the longer we stay on the right side of 0.19, the greater the chance of a move up to 0.4 pence as soon as the end of next month. That's a resistance line projection from way back in early 2020. Good to see an update today from EDX Medical after the direct share buying, and here looking for that initial target here at 8 pence, which is the top of a broadening triangle there from the end of 2022. Above 8 pence, looking for a best case scenario target as high as 13 pence, which comes from a long time ago, which I'll try and get if we can, but up to 13 pence from the middle of 2021 and the tech capital days. Only back below 6 pence now, and probably for fussy, the 50-day line at 5.5 really delaying the upside scenario there. Bit more interest in lithium to start 2024, especially down under, and here you can see that Firering strategic looks as though it's ready for a turn. We've got bullish divergence. Looks like we're ready to break out of that falling wedge in place since October at 4.5 pence. Above that, looking for up to 6 pence by the end of next month, or hopefully even sooner than that. MusicMagpie is next, and here the picture looks as though we had a bear trap rebound from below the December support there around 10.75 pence. Above that, looking for up to 22 pence by the end of next month in this W-shaped turnaround, which is backed by bullish divergence in the RSI window, so lower lows on the price but higher RSI trace. Oncimmune is next, and that's included largely because on the basis of just 4 days, it looks as though we've got the possibility of a turnaround in the whole biotech area. A nice sideways shuffle along the 200-day line over the recent past, 24.5 pence, and above that looking for at least 30 pence initially, which is a June resistance line projection, and then up to 50 maybe over the next 1 to 2 months, so maybe by the end of February. Obviously that's a punchy call, but that sideways shuffle looking quite encouraging. Only back below the 50-day line at 22 pence, really delaying or questioning the turnaround scenario. Very pleased with the next stock here, which is going from strength to strength to Oriole. It's an island gap reversal, then 2 unfilled gaps to the upside. We had our initial target there at 0.13, we had a next target there at 0.24, and above to 0.24, looking for up to 0.32 at the upper parallel of that triangle, the upper parallel line there from back in the early summer of 2022. So let's see if we can stay above 0.24 to head up to 0.32. Next up is stock which has certainly been in the wars, but hopefully it's going to have a little bit of a better time now. Here we've got Polarean, which is doing what we like to see, which is a rebound either side of the 50-day line, around 6.5 pence above that, looking for the 11 pence area by the end of next month or even sooner. If we look closely, I think you can see that there was an unfilled gap to the upside, so it's a bear trap gap reversal. The high on the 6th of December, 6.25 pence, and it's a 5.25 pence, and then the low after that, 5.35. So that was a bear trap gap reversal there on Polarean. On to the last three, starting off with R.E.A. holdings, and here, although it's a rather obscure stock, we've had a nice break of the 200-day moving average, the first time properly since March last year. Rising trend channel base there, top of the channel there at 105, looking for that by the end of next month, while we hold above the floor of the channel and the 50-day moving average at 70 pence. Ideally, we stay above that 200-day line at 72 pence. URA looks like it's in the run-up to production, if you believe what you see on social media and other places as well. Here we've had bullish divergence with the low lows for December, but higher RSI trace since then, and looks like a sort of saucer-shaped reversal. Initial target here, the bottom of that November gap down at 1.47 pence, but really looking for the top of the post-November triangle as high as 1.8 pence by the end of next month. Neckline resistance broken there, around 1.25 pence, so ideally we stay on the right side of that, backed by the bullish divergence. Finishing off with Verici, and here you can see that looks like it's third time lucky for breaking the 200-day moving average. Interestingly, we've had the 200-day line rising since last month, and above that rising 200-day line at 10.25 pence, we're looking for the top of the rising trend channel from March last year as high as 19 pence to be hit as soon as the end of next month. Heading back below the 50-day line at 8.5, really questioning the recovery there after the bear trap gap reversal that we had back in November. That's it for me today. More updates tomorrow.